Quick disclaimer before we get started. I'm an authorized representative of ShareX Australia, and this content is for general educational purposes only and does not constitute financial advice. A little bit about me. Got a Bachelor of Education, certified financial technician, certified electrician as well. All right, let's get into it. So before I get into the individual charts, what I want to talk about first is commodities, because now you'll know why I'm looking at certain things that I'm looking at. So how markets work is when something is historically expensive, something else is historically cheap. And then what happens is money will start rotating out of the expensive stuff into the cheap stuff. And they'll do it on extreme euphoria, extreme greed sentiment. And then they'll start accumulating the things down the bottom when no one's thinking about them. And then once they've filled their bags, they'll then start releasing all good news about it, all the retail involved. They then write it all up. Then when that's in euphoria and it's going on the moon, they then start selling their bags in that. So as you can see here, commodities are historically weak compared to the S&P 500. So we're down here now. We've only been down here, tech bubble, energy crisis, COVID drop, and we're still down here now. So commodities are historically cheap. Times when equities were extremely expensive. So it's all about just knowing that money rotates from one thing into the other. Here as well, another chart telling you the same thing, NASDAQ to commodities ratio. So again, last time we were up here, the NASDAQ was the tech bubble. We're up here again now in 2024. People think, oh, but this time's different. You know, that was the internet. Everything was extreme. I'm going to show you how many charts, why it's so not different and why it's actually the exact same. And it's never different. So this is a chart of the S&P 500 dating back hundreds of years. See, 1800s. There's a few key dates I really want you to see here. You can see here, 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 and here. Okay, you can also see this middle line acts as kind of like an average. That's probably had something called mean reversion. That's where the market should be. So when you're above that line, you're extended. When you're on the line average, when you're below it, you're undervalued. I also want to look at these dates here. This one here, this one here. Okay. What I'm now going to do is show you why fundamentally wise the S&P 500 is extremely expensive. So if we bring up the Shiller P ratio, you can see we range anywhere from 45 down to single digits below 10. The average is 17 here. Okay, this is the average. So you can see 17 is the average. We're up at 36. We're more than double the average. These points here, when you're below 10, is where Warren Buffett would buy the index. Okay, we know that he buys things when they're undervalued, then he sells them when they're overvalued. So if you think like that as a value investor, but he does it for individual stocks, what I'm talking about is for the overall index. So you always want to buy the S&P 500 whenever you can get it under 10. Because that has shown historical major decade-long bull runs. And I'm just going to show you why. Under 10 here in just before 1880. Okay, and that was here. And then you can see we went on massive bull run from 1880 up until 9, so a 50-year bull run. So safe to say that was a good time to buy. Here in 1920, when we were down at 5, again, 1920, right here, safe to say a good time to buy. Here, 1932, around 7 or 8 point. Again, here, bottom of the Great Depression, good time to buy. Here, 1942, when it was 8 point. 1942, again, right here, great time to buy. Then you'll notice here, you've got, again here, that's 1942, 1949, it started to get in there a bit as well. So 1949 to here, another great time to buy. You're still down on this average here. And then really after that, it wasn't a great time to buy again until we came back to here in 1975 to 1980. Okay, so if you look, once it's going up there, then, so you've bought here, here, and here, and then look what you've got, the bull run. And then it wasn't a good time to buy again. Not there. 75. Okay, first time was 75, 74, 75 to 83. So this was the period to buy again. See, buy here, buy here, buy here, buy here, buy here, buy here, buy here. Fundamentally very cheap. Then after that, you can see there hasn't actually been a time to buy again. And you're probably thinking, oh, well, buying the bottom of the GFC or buying the tech bubble, wasn't that a great time to buy? Yes, but technically no as well. And I'm going to tell you why, because a lot of people don't realize. What if I were to tell you that the equities have been in a bear market since the tech bubble? So this was actually your last time to buy equities cheap. You'd probably think I'm crazy because, you know, the NASDAQ and the 500 has gone extremely well in the last few years. The thing is, though, you always have to measure stuff against gold, not against the US dollar, because the US dollar, they just print more of it. And it's not that the equities are getting more expensive, it's that the purchasing power of the equities are not going as far, so they're not worth as much. Because back in 1929, $100 bought you a car. $100 doesn't buy you a car today. However, the same amount of gold in 1929 bought you a car as it will today, because gold is that store of value. So instead of me just talking about it, I'll show it to you in the charts. Okay, this chart here is the S&P 500 against gold. Okay, so what it means is when the chart's going up, the S&P 500 is outperforming gold. When the chart's going down, it means that gold is outperforming the S&P 500. You'll notice the dates here. See here, this is the bull market leading up to the top of the Great Depression. Then we had our retrace, found our bottom. Okay, that was our first bull market. Then you can see here, this one here, again, when we went up to the 70s, which was here, so your next bull market. So this was our first bull market. This was our second bull market. Oh. Okay, and again, can you see how the equities went higher than in that price there? Okay, because that's it. They were in a bull market. They outperformed gold. Then we bottomed out in the 80s, as we know, back in the 80s. And then we went into the next bull market. And again, tech bubble took out the high again. So during the tech bubble there, if you had swapped all of your equities for gold, you have outperformed the market. Because as you can see now, we've made a new high on the S&P 500. Okay, but we haven't done it against gold. So technically we haven't been in a bull market, because if we're in a bull market, it would be up making a new high against gold. Because right now you were better off converting all of your money into gold there and sitting on gold. You've outperformed the market so far. So crazy when you think about, like, Daniel, actually gold has outperformed equities since 2000. And the reason why is because this was gold here. Gold did extremely well up until 2012, and then we went in our sideways market and we corrected. Now we're going back into the next one again. Okay, but during that period there was when equities did absolutely nothing. That was when equities went sideways. Okay, this was this. So while this was going sideways, gold was going absolutely ballistic. So looking at the Shiller P ratio now, you can see when we're above 30, historically has been times to get out. So Great Depression, when we were 30, whatever that was, 31 or something. Back to S&P 500, that was a time to get out. Here at 42, we know was a time to get out. Just leave that one. Here in February 2020 at 36, it was rejected and we had that bear market, but now we've taken out the high, but now we've come up again. We're up at this channel resistance again. 1, 2, 3, 4. So we've only been at this Shiller P ratio above 34 times. 1, 2, 3, 4. And we've hit this channel resistance 1, 2, 3, 4. So fundamentally and technically, it's not a good time to enter equities right now. And historically, they have underperformed for 15 years, 25 years, 15 years, long periods of time. So you need to now ask yourself, are you one of the best traders on the planet that has a track record of calling tops and bottoms on things? Because if you're not, and you're still in the equity market, that's saying that you are. Because otherwise you're playing with fire, and history tells you that it's not a great time to be in equities right now. I have a track record of calling lots of major tops and bottoms, and I'm still not playing with fire, because at the end of the day, you don't have to. Because like I said at the beginning of the video, when something's expensive, something else is really cheap. And I showed you commodities are super cheap. Now what I'm going to show you is, this is gold against the Dow Jones. So this is how much gold it takes to buy the Dow Jones. So can you see down here, it's the opposite. Here, 1929, when equities topped, gold was very cheap compared to here in that 70s and 80s, very, very cheap. Here, tech bubble, very, very cheap. And here again now. So can you also see how that 1, 2, 3, 4 times equal the 1, 2, 2, which was still an underperformance for equities for 15 years. So 1, 2, 3, and now 4 times. All times when equities had a terrible time. And this one's yet to be seen. I want to now zoom in on this and show you how it has now changed market structure and why that's important. So this is the 3 monthly candles. So every candle is worth a quarter of a year. So this is looking at the big picture stuff. I'm going to zoom in on this and show you why it's important now. So can you see here how you've had a change of market structure here? You've come up, gone sideways, and now higher, 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 and you change market structure. This means that gold will now outperform the Dow Jones Industrial because it's in an uptrend against it. Okay, it's had its move up. Last time this happened was here. That's 2nd of March before the COVID drop. Last time before that, you can see equities have outperformed. So this is where equities were in a bull market. So back here, last time we changed market structure was back here. So this was the tech bubble. Look, 1999. So when gold starts outperforming equities, it's when equities get expensive. So this has changed market structure, gone up, just like this. Okay, tech bubble. And again, back here. Same thing. Once we break out and change market structure, where are we? That's 72 period. What happened after that? 1970s, 72. It was our sideways equities because gold is outperforming equities. Okay, again, this is equities bull market. And then here, Great Depression. Change market structure. 1930, which we know was the Great Depression. So now you've got another chart that's gone bullish that's telling you get the hell out of equities, get into commodities, because equities, again, are showing you they're historically expensive. Let me show you another chart telling you the same thing. Okay, this is your yield curve, which is often called a leading indicator for a recession. Here, 2000 tech bubble. Here, GFC. Here, COVID. And here now. Okay, all times when equities did really bad. Tech bubble, GFC, COVID, coming up again now. If I now zoom in on that, you'll notice that we have changed market structure. Higher, 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 low, and going up. History shows once we get up towards this line here, equities fall off a cliff. Here, GFC, tech bubble. So again, you're sitting on a ticking time bomb. Whether it happens tomorrow, next week, next month, next year, couple of years, you've got to ask yourself, are you the best trader in the world to know to time and get out at the exact day? Because it happens very quick when it happens. And you'll be down very quick, just like when the Japan carry trade happened. All of a sudden, oh my God, it happened and things were down real quick and you don't get time to get out. This is why people like Warren Buffett is selling out of massive, sitting on nearly $400 billion worth of cash. He sold 75% of his Apple shares. Okay. Because again, like what I just showed you with the Schiller P ratio, he does that just with individual stocks. I'll show you what I mean. Okay, this is Apple. It was his number one holding. I think it was 30% of his portfolio. It's now much less because he sold 75%. He bought it in the beginning of 2016, like January 2016, which was down here. So you can see the PE ratio was down at around 11. Okay, super cheap, down at its bottom end. It's now up here close to 40. It's only been up here twice, well, 4 times. 1, 2, 3, 4. You can see now, back in 2020? Yeah, August 2020. Here, 2007, GFC, 2005. Okay, so around these periods here is when Apple was expensive, equities crashed. Here again, expensive. He's probably thinking, man, I bought this thing when its PE was down at 11. Now it's 40. It's 4 times as expensive when I bought it. It's not value anymore. And when it takes up that much of your portfolio, you got to remember, if it takes up 30% of his portfolio, if Apple crashes 50%, that's 15% of his whole portfolio that gets wiped out. So you can see why he's mitigating risk, because he's just doing the same thing that we just did this year, but on an individual company. Obviously, much deeper dive than that, but I'm just trying to show you a quick shortcut. Just real simple, just literally using a PE ratio. He uses what's called the Warren Buffett indicator, another thing telling us, and I'll show you what that is. Okay, so how the Buffett indicator works is it takes the market cap of the stock market and puts it against the GDP of the United States. Okay, right now it's at 209%, which is the highest it's ever been, even higher than the tech bubble. And here's the chart of it. You can see, again, just another chart telling you the same thing. We're up at 2 standard deviations. Back here, last time was the 70s, tech bubble, 2022, and up here again now. So literally, see how they're all the same dates that we're seeing on every single thing when we're seeing all the equities are telling us that we're expensive, every single chart. And there's more than this. I'm just trying to give you guys a quick shortcut of it. And the commodities are the opposite. They're down here at the undervaluation, because when something's expensive, that money needs to go somewhere. It doesn't just leave. People don't just sell their stocks and then park it in cash. No, they sell it and they rotate it into something else. Okay, so again, you can just see really expensive money will rotate into what's really cheap, which is why I'm looking at commodities. Okay, now let's use that to find our information. Okay, let's start with chart of the week from last week. And you can see here that you've got that accumulation off here. We bounced out and we're coming back for the retest, it's looking like. So from there, like if you can actually project out that bottom from using our ABC here. So A, B, see what's called an expanded flat, where you take out the high, take out the low. It's coming down the fib 2 perfectly. So again, this one's still looking good. Right now, looking to test this resistance as support. If we zoom in, I still think there's possibility of a little bit more. It might retest here, it might come a bit lower. Okay, right now it's hit the 382, so it has hit its minimum, but it could go anywhere within this box. All right, so hopefully it does bottom off here. 382, line with that, and we start to move up from there. But it might also even go something like that and come down a little bit more. As long as it doesn't go below here, I'm okay. As long as it doesn't go below 974. Because then I go, okay, why are those buys disappeared? And why have we broken out and come back within? So anything above that 974 is fine. And I am looking for a bounce off this kind of level here. Okay, EIQ, still looking all right. Following its roadmap at the moment. So looking at the big picture, you can see that we had our breakout. Okay, beautiful base, broken out, and now it's come back to its zone here, and this is where we're looking for the buyers to step in as well. So it's literally following the roadmap perfectly. This is the part I've circled where I'm looking for a buy. I'm already on it, but where you would be looking for buyers to step up, and it'll be around here. So it's coming down lower in volume, potential hidden bullish here, reset the RSI. You know, it's just extremely overbought, gapped up, had to come back and chill. So again, while this one is above this kind of 20-cent zone, absolutely nothing to worry about. And yeah, should just be coming back to retest that resistance, that support. Okay, silver had its pullback like we talked about after that interview with Craig going through the silvers. We all knew they were really extended. We all knew they needed to pull back, and it's had its pullback to here now. So what we're hoping for now, this is a major level here that kind of needs to hold. Otherwise, we're getting a deeper correction down to here. So right now you can see you got channel support, resistance support. That's also the fib, the zag zone from here as well. So that's why I've got this as the bounce zone. So we don't really want it going below 31.90. That would be like the really bullish case, that it just bounces off here and goes. Bit slightly a bearish, but still bullish, is that we've come up and we get a retracement back down to here. So it might come down to this kind of 30. I don't think it would come down to 29, but probably this 30 to 31 zone here. And then, yeah, still hold here and then look to go as well. But yeah, at the moment, had its retrace. We knew it was going to happen. Everything had run so hot, and we'll see how it reacts here. So it could be a great time if we get a change of market structure off here. So coming into it, going to the smaller time frame, you can still see its bearish market structure right now. Lower low, lower high, lower low, lower high, lower low just. But if that starts to change and we start to go like that and we change market structure off this zone, that is what we're looking for. You can see that we're getting bullish divergence at the moment. So a bit of weakening trend coming into it. That's good. I'll be surprised if you don't at least get a bounce here. I think you'll at least get a bounce, but whether or not that bounce turns into something more is what we need to see. So I'll be surprised if you don't at least get a move up to here. Okay. So, and then we'll see how it goes. We don't want it to then reject there and then come back down to there. Okay. But it could bottom there. Just be careful. It probably will reject here. You'll have a lot of confluency. You'll get your decline. You'll get all this here. This will be a big resistance. So I think at least a bounce to there. And then we want to get through this stuff here. Once we get through there, you can see that's where all the trap money is. Look at all the buyers. Buying, 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 buying. Once you get through here, 33, what's above it? It's only selling, 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 selling. So once we get through that 33.70, we're through all the trap money, and then we've only got sellers left, and that's fine. So that's going to be our big target to get back above now. So following on from a couple of the minors from there, like ARD, we talked about in the video that it was really overextended, coming up against its resistance here. So yeah, chilling here. I think you can get a bit more of a pullback, probably down there around, yeah, this 2.6 maybe 2.4, and then see how it goes. And we want to see it then get through. At the moment, this is just a 3-wave move, 1, 2, 3. If we get and get through, then boom, that is major bottom, looking very good. But as you guys know, everything, I really like ARD, one that fundamentals and technicals are all lining up for much bigger upside. Okay, USL. Same thing, like this is here still from the video with Craig. Up, probably pull back a bit. Nice healthy retracement and go. So yeah, nothing to worry about here on the bigger picture. POL been an absolute screamer. Look at that. So from YouTube about a month ago, back here at 20, it's more than triple your money. Been an absolute ripper. So this was one that didn't pull back, and this is why it's in the video. You never just sell in anticipation, because sometimes it looks like a pullback's going to happen and it keeps going. So that's what I always say. If you can't hold the zags, you don't deserve the zigs. And then if you're trying to time every little move, you're trading. You're not investing or holding longer term. And I've made that mistake before, where I think I'm smarter than the market, and I'm very good at that long-term trends. It's much harder to time every little move in and out. Even the best traders in the world can't do every move in and out. So what makes you think you can? So you just need to let the market structure do its business. But looking at NVX, All right, so we've done our move up. I said we'd reject the 618. We have. I was hoping the buyers would step in here. They did, but now you can see they've changed market structure. But we're at the do or die level now. So this is the level where buyers should step in. 618. See buying, 618 level here. All right, so we really want to start to see the buyers come in now. That will then conform our wave 1, wave 2, and then looking at. But like I said, with this one, there's been no official change of structure yet until we do this. I said here, this is not a change of structure. That's a zig. We need to get our zag, which we've got. This is how markets move. They zig and they zag, like I said a million times. Now we just need to see the buyers stepping in higher. The sellers are selling higher. We need to see the buyers buying higher. So they need to step up really soon, somewhere in this vicinity here. But let's zoom in and see if it's looking like it's got anything now. So it's very oversold. It has come down lower in volume, which is good. Yeah, we just need to see the change of structure. So just look for an hourly change of structure. I do like that's a triangle there. To me, this looks like a perfect ABC wave. So yeah, everything's still looking good for it. Just need to see the change of structure off here. MFG still looking really good here. To me, this is looking like a leading diagonal. So you've had your 1, 2, 3, 4, 5 contracting leading diagonal. So you may also get some kind of ABC before going as well. But overall, as you guys know, this was one that, this was a major bottom back here when it came down to 2.618 off that ABC. So, it's always good to look at the big picture. You got to remember this thing down here was 30 cents. It went from 30 cents up to $74. That's over 200x. You don't go and then 5 waves up. All it did was then do an ABC. And you can see what it did was come down into the zag zone. And you can also see that measured move of the ABC came down to that 2.618 to the dollar. Bottomed there and is now changing. So I'll be super surprised if that's not a major, major bottom. Looking phenomenal. It's the 2.618 extension into the zag zone after your 5 up. And yeah, this is looking like fantastic accumulation. So leading diagonal might have an ABC now, or it might not. It's yeah, just something to be aware of there. Okay, a couple of the betting. We know we got Melbourne Cup today, and it's like all the Melbourne Cup's kind of got the betting ones going off a bit. So points bet took out like we talked about last week, so that one's taken off there. Just bullish market structure. Just hold it while it's bullish market structure. Okay, while it's sending higher high, higher low, it remains in the portfolio. Volume's confirming bit oversold, so you might get a bit of a pullback. See if it retests this zone here. But yeah, that one's been good. Bet was another one that I posted about early on last week. It changed market structure up here. Ooh, not the best looking candle there, is it? So we really want to make sure that this resistance becomes support now. And if it does something like that, and if it gets through here, if it gets through up here, that's where things get exciting. Because if you zoom out to the weekly, you'll see, then you'll have a double bottom reversal. Okay, so a lot of work to do, but needs to get up through here to confirm the double bottom reversal. Then you'd be looking for at least a nice retracement up to that kind of 25 cent zone. I'd be looking for some kind of move up to here at least. BTR broke out. All right, so it's broken out. Just got to get through this red zone now. Let me just get off here. We've come up, broken through here. So that 20 cents, it's up. You're up about 20%. We would now want to see get through here, get through there. Things are looking good, but as I say, beautiful volume. Still got not overextended yet. So still looking good. BTR here. Still pretty hopeful on lithium here. It's bounced off. Still again, like NVX, waiting for the confirmation, but the buyers did step in here. Resistance support, back to support again. We just want to see the change of structure back up here. But it's looking pretty good. They're selling high, they're buying high. We just need to get it through and there. And then if you're looking at your big boys like PLS, looking for it to get through here. If we get through there, that's a non-failure swing reversal. Right now you can see you've double bottom off there, tested that resistance as support. So it's looking good, looking strong. Volume's starting to roughly come in. Still got a lot of work to do. But yeah, definitely one to keep an eye on. LTR. Same thing. If that can, buyers can stay in here and then you get through here, then LTR will be a great one through there. And then IGO as well. If we can get a change of market structure up through this $6.10, will be a nice one through that decline there as well. That'll just be a nice little accumulation down there. Just want to see it get up through here as well. Looking at a couple of the smaller ones like CXO is still looking to, as we know, it's down on that major 618 level, but it needs to get up through here. So really need to see this pivot and come up, because at the moment it's just a 3-wave move. Okay, but yeah, it needs to get out of this China choppy crap and start moving a bit. RSH is still smashing it through. Yeah, she's been absolutely killing it from that end. So entry here at 3 cents, and then again I pointed out here at 3.7. It's been an absolute ripper. And the good thing is it's now got through this major level. So yeah, very extended. It'll probably maybe pull back a little bit at some stage, but yeah, looking phenomenal there. RSH been an absolute killer. SYR, same thing, waiting for that level to break here as well. This is one of the top 10 shorted stocks on the ASX. So as you can see, ending diagonal, selling higher, buying high. If we can get up through this 5 cent zone, then all those short sellers won't have a choice but to buy back their stock. So then you get double buys. You get people like you and I that are buying it because it's changed market structure. And you also get the people that are shorting it that have to buy back. And when it's one of the top 10 shorted stocks, it pumps, because the shorted stocks, you get the double buyers. So, and that same with PLS. So PLS, I think, is number 1. So if it gets through that level, they're going to have to stop shorting it, and not only stop shorting it, but also buy it back. So yeah, keep an eye on that one there still as well. As I talked about last time, Vanguard bought 5% down around here. So yeah, just waiting for that change of structure on SYR. CHN came back to that $70, $80 zone. Yep, so waiting to see whether or not the buyers come in here. Let's go into the hourly there. Yeah, it's come down low in volume, reset. So yeah, nothing to see yet, but you'd really be looking for it to get back up through here. See old support become resistance. If you could change up back through there, that'd be a nice little break and retest kind of thing off here. But yes, CHN still looking good. Yeah, volume still increasing. Nothing to, like I said, anything above that $1.70 is still extremely bullish. So, and unless you get a change of structure between now and then, but at the moment, it's still good. EVN. We talked about it on the $4 breakout here. So that one's broken out, still up. And, you know, you might get a nice healthy retrace here. So it could, like looking at gold miners, they are hitting resistance right now. Okay, so probably going to get a bit of a pullback, maybe even a bit deeper here as well. So, and same things with things like EVN and all that. They are quite extended. They're probably due for a bit of a pullback as well. So it's still good. Obviously, still bullish market structure, but it could have a 1/3, 2/3 or something like that as well. So just be aware of that. The gold miners, because gold is quite extended right now. It hasn't changed market structure, still holding on. But yeah, very, like if you look at the monthly, very overbought on the monthly, very overbought on the weekly, and the daily starting to show bearish divergence. So it is starting to weaken, but no official change of structure, but just something I noticed that and the gold miners and that upward thing, you probably might get a little bit of a pullback there. Something to keep an eye on as well, guys, is the VIX, if it starts to come up through here. So that was our big carry trade move there, and you can see it's just covering around here right now. If we start the break up through there, then you'll get a change of market structure breaking out again. That'll be some nasty volatility coming in. If you also look at something like SNAS, it is showing some little bullish signals down where it is right now. I'll just show you what I mean. So you can see how this last move has come down in really low volume, and you're starting to get bullish divergence off this possible double bottom, and then same on the daily as well. You can see it's come down on lower in volume, and you get new bullish divergences as well. So just be a couple of little signal, and this is NASDAQ bear ETF, which means every time the NASDAQ goes down 1%, this goes up 3%. And it's just showing a little bit of life here. Like, too early to call anything, but that with the VIX being at resistance, I'm just like, just be careful, which is why I put that, be careful, because the SP 500 has changed market structure on the daily. Again, it could just be a pullback. It might just be a pullback to here, but you have had a lower low, lower high, lower low, and that happened through resistance support. So you change market structure. Okay. You can see up in this rising wedge. So you've come down on bearish divergence, lower in volume, which is actually lower in volume back from even the high back here. So yeah, just something I've noticed is that, yeah, it's just a little bit of weakness, couple of little bearish signals, too early to act on. I haven't sold anything in my portfolio, but my stop losses are a bit far away. So what I've actually done is put a hedge on, which means that it's just protecting myself on downside if it does come, until my stop losses do get hit. So I'm just showing a little bit of defense here, because with the election around the corner, you could probably expect a bit of volatility and a bit of what's going on. Chart of the week I want to show you is the consumer discretionary. So same kind of thing here. You can see that discretionary here, we took out a new high here, but it's come up, and I just want to show you. Come up on the weekly on bearish divergence. Then on the daily, you can see the bearish divergence as well. And then you can see we've broken out of this rising wedge and changed market structure. So we are right now at the resistance that should act as support. If we don't hold support here, something's up. All right, so we're here now. We get bullish size, we bounce off here and we just have a nice little retrace. Bearish is if we come through and get, and then you'd wonder, hang on, why does that exist? Things might roll down. In particular, what I'm looking at right now is energy. So when something, so you see discretionary is overextended, and XIJ information technology is as well. Okay, they were quite extended, come up into this little pocket zone here. Same thing, if this resistance doesn't act as support, you've got to wonder what's going on. Energy is the other way. So energy, so this is what I'm keeping on with energy. Energy, go to the weekly. See, energy has been in a downtrend, and then we became very oversold on this bounce here. Are we going to then, this is the major level, it's the support resistance Fib 500. So buy should step in here, or it might come a bit further down, but I'm looking here where it is right now. So looking at that, I'm looking to see whether or not we break up from here and change market structure. If we can change up and get through here, then you're changing market structure, breaking through your decline once you're very overextended. Looking at oil, we're waiting to see whether or not this is big level here, major resistance support, where buyers have been stepping in for a long time. Again, we need to see whether or not they're going to change market structure through. Once you get through this 77, 78, then oil will start to do well. Personally, I think a rotation into energy is happening soon, whether or not it's this week or next week or the week after. It's coming soon, in my opinion, and it's something just to keep an eye on, that I'm quite confident energy will start to perform soonish. So just keep an eye on it. Still a bit early to call, but I'm seeing those signals of early signs of rotation. Just need a bit more data to confirm it. So yeah, keep an eye on your energy, and your materials is the other one. So XMM. We're waiting for, we've had our move up, all these buys here. We want to see the buyers step in here and get up here. Once it does that, you got to change your market structure, and that'll be where your metals and mining start to really perform as well. So not as much to look at today because market's in a bit of a period right now. I'd rather play a bit of defense, wait till next week when I've got more data, more confirmation. So yeah, I guess the message today is a bit more defense. Look at those key levels. If you get your change of structure, don't hesitate to take them, but just have an exit plan whether you're right or wrong. So, okay, if it breaks below this level, this is where I exit. But I just wanted to show you the big picture so you can see I'm going to be really looking at commodities and energy and things like that in the coming months and stuff like that, because history shows that is where money will be going into, and it's all about getting on those mega trends. No point getting the end of something. You want to get on the beginning of something. All right, guys, if you liked the video, please like and subscribe, and I will catch you on the next one.